Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news East Asia is back to normal in contrast to the US and Europe. First, the number of job openings in the US edged down slightly in the first week of December, a sign of a softening labour market there amid an upsurge in pandemic infections and ebbing fiscal support for households. And mortgage applications fell for a second straight week and essentially ending a long upward run, but they do remain quite elevated on a year-on-year basis. In Australia, the Westpac Melbourne Institute Consumer Sentiment Survey has come in very positively, especially for expected future conditions. It is now almost 50% above the low in April and reached its highest level since October 2010, marking a 10-year high. Sentiment has fully recovered from their COVID recession. Separately, China seems to have extended its ban on Australian log imports, claiming a biosecurity risk. In China, deflation is setting in harder now. They've had producer price deflation for a long time, and in November it eased to 1.5% year on year. But they now have consumer price deflation, and it bit quite hard in November. Analysts had expected a year-on-year inflation rate to fall to zero, but in fact it fell to minus 0.5%, below zero for the first time since 2009. A year ago, their CPI was rising at 4.5%, so it has been a sharp downturn. However, new loan growth in China in November was strong, matching analysts' expectations. But the bond woes roll on for their major companies. Their great tech chip-making hope, Tsinghua Unigroup, is now warning more bond payment misses are likely. And Japan is reporting a rather substantial improvement in their machinery orders for October. After a 4.4% fall in September, they were expecting a modest rise in October, but in fact orders poured in. They were up a huge 17% from September, meaning the October level is now almost 3% higher than the same month a year ago. That is a very substantial and positive surprise. Export orders drove these gains. And Japanese machine tool orders for November also reported a strong recovery and are now 8% higher than the same month in 2019. The US Treasury 10-year yield will start today firmer, now just under 0.95% and a 4 basis points rise. And the price of gold is lower today, falling by $27 to $1,842 an ounce. For the first time this year, ETFs are divesting their gold holdings. Oil prices are slightly softer, just under $45.50 a barrel in the US, while the international price is soft at just over $48.50 a barrel. And the Kiwi dollar is little changed this morning at 70.4 US cents. But against the Australian dollar, we've fallen by 0.5 cent, back down to 94.5 Australian cents. Against the euro, we're unchanged at 58.3 euro cents, and that means our trade-weighted index is still at 72.5, a level it's been for more than 2 weeks now. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.